Hello traders. Spartan Forex here. Welcome to my YouTube channel. Support and resistance is one of the most used concepts in Forex trading. Everyone seems to have their own point of view of how you should define support and resistance. Let's take a look at the basics first. Look at this illustration. As you can see, this zigzag pattern is trading in upside direction in a bull market. When the price moves up and then pulls back, the highest point reached before it pulled back is now a resistance. Resistance levels indicate where there will be an overload of sellers. When the price continues up again, the lowest point reached before it started back is now support. Support levels indicate where there will be an overload of buyers. In this way, resistance and support are continually created as the price moves up and down over time. The reverse is true during a downtrend, bear market. In the most basic way, this is how support and resistance are normally traded. Trade the bounce. Buy when the price drops towards support. Sell when the price rises towards resistance. Trade the break. Buy when the price breaks up through resistance. Sell when the price breaks down through support. One thing to remember is that support and resistance levels are not round numbers. Frequently you will see a support or resistance level that appears broken, but straight after find out that the market was just testing it. With candlestick charts, these tests of support and resistance are usually represented by the candlestick wicks. Notice how the wicks of the candles tested the 115.3 support level. At those times it seemed like the market was breaking support. In retrospect, we can see that the market was only testing that level. So you may ask, how do we truly know if support and resistance were broken? There is no particular answer to this question. Some argue that a support or resistance level is broken if the price can actually close past that level. However, you will find that this is not always the case. Let's take our same example from above and see what happened when the candle closed below the 115.3 support level. In this case, the price had closed below the 115.3 support level but ended up rising back up above it. If you had believed that this was a real breakout and entered a sell trade in this pair, you would have been stopped out. Looking at the chart now, you can visually see and come to the conclusion that the support was not actually broken. It is still very much intact and now even stronger. To help you eliminate these false breakouts, you should think of support and resistance more as zones rather than round numbers. Please like and subscribe and click the bell icon to get new video updates. One way to help you find these zones is to plot support and resistance on a line chart rather than a candlestick chart. The reason is that line charts only show you the closing price, while candlesticks add the extreme highs and lows to the picture. These highs and lows can be misleading because doesn't tell you the real sentiment of the market. Looking at the line chart, you want to plot your support and resistance lines around areas where you can see the price forming several peaks or valleys. Line charts showing Forex support and resistance zones. Line charts are very simple to understand, they're too simple, actually. That's because they only depict the closing prices of currency pairs. So traders who want to get more complex information like opening or highest-lowest prices, the line chart wouldn't provide that to them. Candlestick is the most popular FX market chart. That's why there are candlestick charts that basically combine the two previous types. A candlestick chart is the most popular method for visualizing Forex price movements in a given period of time. While line charts only show one price in a longer time frame, the candlestick chart shows four prices in a longer time frame. Other interesting information about support and resistance. When the price passes through resistance, that resistance could potentially become support. The more often price tests a level of resistance or support without breaking it, the stronger the area of resistance or support is. When a support or resistance level breaks, the strength of the following move depends on how strongly the broken support or resistance had been holding. With a little practice, you'll be able to spot potential forex support and resistance areas easily. Thanks for watching and stay tuned for more videos.